Good morning and welcome to IG's early morning call. It's Wednesday, 15th of November. Coming up in today's programme, let's take a look at the headlines as we wait the start of today's European markets. We've seen some earnings coming through, but broadly speaking, it's been a day when we are still reacting to yesterday's US CPI aftermath. The dollar is down, US indices up yesterday. We got gains across the Asia Pacific markets, and we are now looking for gains again across the European markets after yesterday's late session rise that we saw with recent highs for all the major benchmarks. Today, it's about UK inflation. Consumer price index is decelerating, not as fast and as briskly as we saw a deceleration in the States, but we've seen the biggest deceleration since October 2021. And US earnings today, there's a couple of companies worth reporting. One of them is All Sessions. It's Cisco. It's due to report tonight after the closing bell. And it's generally a period of the year when we see liftoff in shares. We'll cover more on that in a couple of minutes. Let's take a look at volatility. We're down again today for a fourth day in a row. Yesterday, we scored the lowest level of volatility not seen since the 15th of September, so 2-month lows in volatility. And this is seeing money going into shares pretty much across the board. London's FTSE 100, absolutely the top of the candle, indicating a very strong opening to the start of the day's trade at 74.88. This is showing us with no sellers in the market at the moment, with gains and MACD indicating that momentum is picking up on the upside. People looking for reasons to buy this. Are we up against a headline or some sort of headwind, I should say, coming up? Well, if you look at a Fibonacci from the highs that we had back on the 17th of October, you can see here that we are at 74.88. 75.32 is the next line of resistance to watch out for, which is a 61.8% retracement in that Fibonacci from that pattern developing there. German DAX, as of yesterday's close, beating the previous line of resistance at 15,576, which has now become support, and we're looking for a stronger start there as well. We are bumping up against the 200-day moving average for the second day in a row, just above where we are, but the market's looking strong. If we get a beat on that, the next line of resistance then to watch out for on the German markets are these highs that we had here. Let me just quickly move that index line up there. There we are. 15,992 is the next line of resistance to watch out for if we escape this area of resistance with a 200-day moving average. French markets, same sort of price action, very strong day yesterday, building on that today, and we have at the moment the highest print intraday that we've seen on the French markets seen since the 21st of September. So you can see that the markets are moving up as we look into the start of today's European session. Let's take a look at what's happening on the Asia Pacific market. Very strong day today, despite the fact we've got a bigger than expected contraction on the Nikkei, on the Japanese economy for the third quarter GDP number. Nikkei 225 up 2.5%. Hang Seng also a very strong day today. We've seen some good data coming out of the Chinese economy in the session in today's trade, and the S&P ASX 200 joining in with a rise of 1.4%. US markets yesterday are gaining across the board because of the end of what was a day of interesting economic developments with far softer than expected consumer price inflation. We've got data out today on retail sales and producer prices, which I'll cover in just a moment. But basically, it was a day of gains across the board in the session in yesterday's trade on Wall Street. And if we look at what's happening on the price action, that very strong day is being matched by a little doji star candle at 45.05, not moved on from much on from yesterday's close. The Nasdaq yesterday, not quite as high as we saw this market. Let me just draw that up there. That was 15,930. We just ended shy of that line of resistance. If we do get a punch up through that, when we see that line pierced, I say when, if we see it pierced today or possibly in the next few days, we'll then be looking at levels not seen since January this year. So that, I beg your pardon, January 2022, I beg your pardon, on the Nasdaq, which would then take us up in areas, well, just showing us that the tech stocks are benefiting once again from this move that we've seen. So let's take a look at what happened in the CPI data yesterday, because in the 12 months through to October, the US Consumer Price Index rose 3.2%. Now, that was down from 3.7% in September and below the forecast from a Reuters poll of economists at 3.3%. Now, the core CPI rose 4% on an annualized basis in October, down from September's 4.1%. I want to show you what's happening on the dollar, because I think this is all really about what's been going on. Traders erased any expectations that the Fed raise rates further and added to bets that rate cuts could begin in the first half of next year. Now, these markets, with this drop we saw yesterday, and the futures markets now pricing in around a 60% chance that the Fed will cut interest rates by May next year, according to CME's Fed Watch tool, up from around about 34% of a chance the day before. So 60% up from 34%, indicating that the next time we could well see an interest rate cut could be by May next year. That's where things are with that dollar basket. Now, what's happened in other areas of the foreign exchange markets because of that? Euro dollar trading at levels not seen there since the 31st of August this year. And we've got a number of other major crosses that we've got where we've seen other currencies gain against that weaker US dollar. Big strong day yesterday for sterling. And what this has done is this has caused us some disturbance in the precious metals markets. Gold up today for a third day in a row. We're now topping 1970 at a 1 week plus high for the price of gold. So gold jumping $20 in the wake of that US CPI data yesterday, giving us an opportunity to buy gold at the expense of that weaker US dollar. Now, traders await more data out later on today. As I said, we've got two pieces of data worth looking at. Retail sales anticipated to fall by 0.3% in October month on month, indicating that the high interest rates are cooling the economy down. PPI growth forecast to decelerate to 1.9% in October year on year. Both those data points due out at 1:30 today, and my colleague Angeline Ong will be taking you through that data and the market reaction at 1:30 in our regular daily Beat the Streets report at 1:30, an hour before Wall Street gets underway. Now, talking about economic data, I want to quickly mop up some of the numbers we saw out overnight. First of all, to Japan, where we've seen some shocking growth numbers, or rather not growth, because the economy shrank 0.5% in the third quarter, quarter on quarter, worse than market forecasts of a 0.1% contraction, and after that 1.1% growth in the second quarter. Now, this was the first GDP contraction since Q4 of 2022. Year on year, third quarter GDP was down or contracted 2.1% on an annualized basis. The estimates have been for a contraction of 0.4%. Private consumption, which accounts for more than half the economy, remained flat, missing estimates of a 0.2% rise. Capital expenditure unexpectedly fell for the second straight quarter by a margin of 0.6%, compared with the consensus of a 0.3% growth number. Let's take a look at what happened on the foreign exchange markets. The dollar rising against the weaker Japanese yen today. The drop that we saw on the dollar yesterday taking us down, but not passing through the 150 level, which had been this line of stern resistance that we'd seen throughout October. And since the break we got on the 31st of October, we've pretty much been above that. There was a couple of days where we saw some frailty, but broadly speaking, this 150 is holding for the dollar against the Japanese yen. Now, meanwhile, Chinese data out overnight. Really good numbers out, actually, from the Chinese economic picture. China's industrial output grew at the fastest rate since April, up 4.6% in October year on year. Now, this was an acceleration from the 4.5% rate recorded in September and beating expectations of a 4.4% increase. Retail sales rising 7.6% in October, quickening from a 5.5% gain in September and hitting the fastest growth since May. Analysts had expected retail sales to grow 7%. Fixed asset investment expanded 2.9% in the first 10 months from the same period this time last year, versus expectations of a 3.1% rise. It grew 3.1% in the January to September period. I want to show you what's happening on the Hong Kong markets. We've already seen what happened with the Hang Seng Stock Index, but this is a good measure of the response to this. If you look at this chart here, this shows us the Hang Seng is up for a third day in a row. We saw that big gain in excess of 2% today. We're off the highs. We're just knocking up against levels not seen since the 12th of October. However, some analysts note that the property sector remains weak link for the economy in Japan and fear that the lack of reforms will prevent sustainable long-term revival in that particular sector. So that's just a pointer on what's happening with the Hang Seng Stock Index and where things are, and the property sector in the context of what we had. Also in China, the PBOC, the People's Bank of China, kept the one-year medium-term loan facility rate at 2.5%, but boosted liquidity injections by 600 billion yuan, which gives some sort of support to the economy, which it certainly feels that there's an opportunity there to continue to support some areas of the economy. Now, let's take a look at what happened here in the UK with UK CPI numbers, which we've seen produced for the month of October. Consumer prices rose 4.6% in October. We have been looking for a 4.8% rise, so that is better than had been expected. Producer prices index falling 0.6%. We had expected a drop of 1%. Retail prices rising year on year 6.1%. We've been looking at a 6.4% print. Now, I've already shown you what's happening with sterling, but I want to show you the intraday chart using, let's take that down to a closer print, to just hourly, half 10-minute candles. You can see the drop that we've seen in sterling as a result of the numbers that we've just seen released for the figures for CPI for the month of October. There's no real change in expectations to the Bank of England because the economy is doing so poorly in some areas such as growth, and we're flirting with recession again so far as GDP is concerned here in the UK. So it's no real surprise that we've seen a little bit of a pullback, perhaps maybe in this CPI number. Now, let's take a look at a couple of stocks worth looking at here in the UK. There's not a massive list of shares that I want to talk about particularly. I want to begin first of all with Tullow Oil. Now, this is a favorite amongst traders and investors, actually, for the retail sector. Clients on the IG platform of heavily regard Tullow Oil. We've seen some good figures out this morning, although it's trimmed its 2023 production forecast. The group cites due to delays in the Jubilee Southeast extension and reduced water injection. But the stock rising heavily yesterday. Now, the concern I have is whether or not this was overdone yesterday. And what we've seen this morning with the trimming of its 2023 production forecast. Sorry, I said there were good numbers. They're not particularly good numbers out from Tullow. So could we see a drawback on the start of today's trade from 33.7 pence the share? The support is down here at 30.2, so we've got about 3 pence in the bag before we meet this line of support, which you can see is a previous line of support back on the 5th of October as well. So that would be the line to watch out for if you are short on this stock goes above 35 pence with a view to taking it down. And the other stock I want to talk about is Experian, the credit checking company. Yesterday seeing gains, reporting an increase in half-yearly profit, benefiting from sustained demand in key markets across North America and also Europe. So a couple of things looking pretty good there, possibly for Experian. Just a couple of companies worth looking at the start of today's trade. Now, tonight on Wall Street, after the closing of the US trade across Wall Street, one all-session stock to watch out for is Cisco. On its fiscal first quarter, the street anticipates quarterly earnings of $1.03 per share, which would be a year-on-year increase of 19.8%. Revenues are expected to rise by 7.2% to $14.62 billion. Now, if we look at the details of expectations, analysts forecast revenue in the Cisco products to rise 8.5% to 11.12 billion. The much smaller services segment seen rising by 2.9% to 3.5 billion. Now, look at this chart here. The quarter has not been a particularly good period for Cisco. You can see the pullback we've seen in shares here on the far right-hand side of the chart. I've drawn these two bubbles around the point at which we saw the markets anticipate earnings out previously in the month of between October and November. And these have been pretty good periods. We have seen this drawback going into these bubbles and then liftoff in the shares. Are we expecting the same today when we see those numbers after the closing bell tonight? Investors will be keen to hear the group's guidance for the current fiscal year, especially after announced a few weeks ago the launch of meeting room devices powered by NVIDIA's AI engine. So let's take a look at where we are and let's take a look at the potential for shares. You've got support down here at 51.10, which includes the red line here, which is the 200-day moving average. So that would be an area of support. If we saw some particularly bad numbers, you'd go short on this and you'd put your price target down here at 51.10. We're opening at 53.34 at 9 o'clock UK time this morning. These shares will be traded after the closing bell tonight. If we do get good numbers and there is a liftoff, then the line of resistance to watch out for are the highs we saw back on the 1st of September at 58.18. This stock reporting earnings after the bell tonight on Wall Street. Meanwhile, one other stock to watch is the stock of the retailer Target, due to publish its quarterly report before the market opens this morning. This is not an all-session stock, but I think it's worth looking at because it's good for the retail sector. It's a big retail week this week. Analysts expecting earnings per share of $1.46 on revenues of $25.29 billion. This compares to earnings per share of $1.54 on revenues of $26.5 billion this time last year. Guidance will be key. 3 months ago, Target stated it expected sales to decline slightly for the rest of the year. During that period, Target shares falling by around about 16%. Now, near the low of the year, some analysts have a bullish long-term view on the stock. Let's take a look at what's happening with the stock of Target. These are one-day candles, and you can see recently we've dipped below this line. I've still got him on here on the chart, which goes back some time down there to levels not seen since June 2020. So we're trading below that at the moment. We will open the session today at 110.69 after the company produces those figures. Some analysts have a bullish long-term view. Holiday season coming up, and yesterday's inflation data lifting the possibility of interest rates being cut next year, and that could be good going into the earnings out today for Target this morning. Now let's move on very quickly to take a look at what's happening with oil prices. Just the one area of the market that we usually follow up on, which I've not touched on yet. We have this falling line of resistance on Brent here, which is around about the 200-day moving average at 82.43. If we see a continuation of this being held out, then we'll see this line down here at 79.17 being tested. And I think it's more than likely that we could well get further declines in the price of oil, especially if we see a further demand reduction. That being said, good economic data out today from China would imply that China is looking to increase or certainly keep up its demand of oil. But as we heard yesterday, there's a lot of oil coming out of the Russian market, which isn't currently included in pricing. The Russian cap on prices of $60 a barrel just not being met. Russia is sending a lot of oil out, especially to the Chinese economy and other areas of the market for which Brent is especially sensitive, is not really taking into account that amount of oil. But there is oil around in the market, and the drop here down at 79.17, I suspect could well be the next price target to watch out for oil. That's it from me. We'll be back at 10:30 with Charting the Markets. Watch out for those two stocks to watch here in the UK markets this morning, Experian and Tullow Oil. A couple of other companies reporting across the European continent, including Alstom and also numbers out today. And Infineon, I haven't covered those this morning, just two other businesses perhaps maybe possibly to watch at the start. Whichever way you look at it, we've got gains in the bag at the start of today's European session, especially here in the UK markets after the softer than expected CPI data. We're back at 10:30 with Charting the Markets.